Hello students, how are you? I hope you all are safe and sound, and please keep learning, right? So I again welcome you all with a new topic, that is estimation of working capital requirement, right? Students, in this lecture you able to learn how to calculate the working capital requirement for manufacturing and non-manufacturing firm, right? So in this lecture I'll discuss only about the estimation of working capital requirement for the non-manufacturing firms. In next lecture we will learn how to calculate the working capital requirement for the manufacturing firm. So students, please, for getting the updated videos and the updated lectures, so subscribe this channel and please don't forget to press the bell icon button, because if you press the bell icon button, that only you will get the notification for upcoming videos, right? So let's start with a new topic, that is the estimation of working capital requirement. Students, the working capital is calculated by three methods, that is your percentage sales method, regression analysis method, and operating cycle method. So first is your percentage of sales method. Students, in this method, the estimation of working capital is based on the assumption that the level of working capital of any firm is directly related to the sales value, right? Let us take an example. Suppose if the sales in 2007, if the sale is amounting to rupees, suppose 30 lakh, right? And your working capital requirement is suppose 6 lakh, right? And working capital required was 6 lakh. Now, for the estimating for in 2008, suppose if you have to calculate the working capital requirement for 2008. Now, sales is given suppose 40 lakh. Now, how much? What is the working capital requirement? That is about your, that is about your 8 lakh. That is your 8 lakh, right? That is 20% of sale. Here the working capital requirement is 20% of sale. Sale is your 30 lakh and the working capital requirement is 6 lakh, right? 20% of sales. Similarly, in 2008, if sale is 40 lakh, then the working capital requirement is your 8 lakh. That is 20% of your 40,000. In this way, you estimate the working capital requirement in the percentage of sales method, right? But this method is not much applied in all the cases, because a direct relationship between sales and working capital may not be established, right? So next we have your regression analysis method. Student, this method is based on the statistical technique of estimating or predicting the known value of dependent variable. Regression analysis, what is the equation? Y equals to A plus B X. So here you calculate, you estimate the value of, right, dependent variable. Y is your dependent variable, and suppose this Y is suppose your working capital requirement, right? And A is your intercept, right? And B is your slope, and X is your independent variable, that is your sales, right? So with this with the help of regression analysis, you predict the value of dependent variable, that is working capital requirement, from the value of independent variable, that is x, which is known, right? You find out the unknown value of dependent variable, that is working capital requirement, from the known value of independent variable, that is your sales. This is done on the basis of regression analysis, right? So next we have the most important method, that is your operating cycle method. Now we use this method for calculating working capital requirement, basically operating cycle method. So I have already discussed much about this operating cycle method, right, in my previous lecture. I think you all must be aware of working cycle method. So just I discuss in one point. This method of estimating working capital requirement is based on operating cycle of working capital. And this cycle, what is this cycle? This cycle is start from your, yes, with purchase of raw material, purchase of raw material or other resources, and end with the realization of cash, right? Realization of cash from the sale of finished goods. This is all about your working cycle method, in which you calculate the inventory conversion period, receivable conversion period, credit conversion period, right? So in this lecture we learn how to calculate the working capital requirement with the help of operating cycle method. This is a simple method, that is working capital required equals to cost of goods sold into operating cycle in days divided by 365 or 360 days plus desired cash balance. Further, this formula is elaborated in the form of format, right? Which just take the simple example. For example, sale is given, your cost of goods sold is given, and your operating cycle is given, minimum desired level of cash balance is given. So you have to calculate as working capital requirement by assuming 360 days in the year. So estimated working capital requirement equals to cost of goods sold into operating cycle, that is days, divided by 365 or 360 days plus desired cash balance, right? So this is your cost of goods sold. Estimated working capital requirement is this, and 365 days is given, this, plus desired cash balance, this 75,000. So estimated working capital requirement is equals to 8,75,000. So this is the calculation based on the operating cycle method. Now next we learn the estimation of the component of current assets and current liabilities, right? Estimation components of current assets and current liabilities. Students, please learn this formula. These are the very important for calculating your estimation of working capital requirement. First is stock of raw material, that is equals to budgeted annual units of production into estimated cost of raw material per unit into average raw material holding period in the days or month or week, जो भी जिसमें भी आपको गिवन होगा, either it is days, week and month, divided by number of days, month, week in a year. अगर ऊपर आपको week में होगा तो नीचे भी आप week में करेंगे, ठीक है. Next is stock of work in progress. Same thing, budgeted annual units of production into estimated work in progress cost per unit into average work in progress holding period in days, month or a week divided by number of days. Stock of finished goods, budgeted annual unit of production into estimated cost of production per unit into average holding period of finished goods in days, month or week and divided by number of days. Similarly, investment in debtors, and at last these are the component of bit of current assets, right? So stock of raw material, stock of our work in progress, stock of finished goods, investment in debtors. Now at last, if given, you add the cash and bank balance in and your prepaid expenses. So next you have your estimation of the current liabilities. These are the current liabilities. First you calculate investment in the creditors, budgeted annual unit of production into estimated raw material cost per unit into average payment period of the creditors in days divided by number of days. Similarly, credit for wages and other expenses, budgeted annual production in units into estimated labor or overhead cost per unit into average time lag in payment of wages, overheads in days, month or a week divided by number of days. So this is the format for estimation of working capital requirement for non-manufacturing firm. Just see, first there is our current assets, you less current liabilities from the current assets, right? And you will get the working capital requirement, that is current assets minus current liabilities, add provision or the margin for contingencies if any, then you get the net working capital requirement. And this is the format for manufacturing firm. So please note it down and understand this format. Next we have the calculation for the working capital requirement for the non-manufacturing firm. Suppose the information is given. Here you have the information: projected annual sales, selling price, percentage of net profit on sale, average credit period allowed to the customer, average credit period allowed by the suppliers, average stock holding in terms of sales requirement, allowed 10% of the contingencies, right? So now this is the statement for calculating working capital requirement for a non-manufacturing firm. First you calculate the current assets, then after that you subtract the current liabilities from current asset, then you get the net working capital. So first you calculate the current asset, that is your first is your debtors, right? So formula for correction of investment in debtors is equals to budgeted credit sale in units into cost of sale per unit into average debtor collection period, right? Average debtor collection period in month, days, week, whatever it is, divided by 12 month or a week. So first this is your budgeted credit sale. So budgeted credit sale is given 1 lakh, cost of per unit is 8 per unit. So total budgeted sale is how much? 8 lakh. Just see the calculation. Total budgeted sale is 8 lakh, right? That is 1 lakh into 8 per unit. So it is 8 lakh. Now budgeted sale is how much? 8 lakh, and it is given that profit is 25% of the budgeted sale. That means 2 lakh is your profit. So what is the cost of sale? Then the cost of sale is equals to your 6 lakh. This is your 6 lakh, right? 6 lakh multiply by your average debtor collection period, that is your 8 month, into divided by number of days or a week. So if it is given in week, then we take the week, 52 weeks. So your debtor collection period, investment in debtor is equals to your this. Okay. Now you calculate a stock for the finished goods. So stock for the finished goods, for the stock of the finished stock for the finished goods is equals to budgeted production in units into cost of goods sold per unit multiply by finished goods holding period divided by 12 months. Here you consider, students, remember that it is a trading concern. So the cost of sale, this cost of sale is assumed as your purchase, right? Cost assumed to be as purchase. So this is your, what is this? Budgeted production in units, cost of budgeted production in units, right? So 12 month your budget finished goods holding period is given, that is your 12 week, I think. Budgeted, this is stock of holding period is your 12 week divided by number of days or week, that comes your this, right? Now this is nothing, please, this line is by mistake, so remove this. Now total current assets are debtors and stock. Next we have from the current assets we subtract the current liabilities. Current liabilities are your creditors, and your creditors, as it is the manufacturing concern, so we consider as the cost of sale as to be assume टू बी परचेज. जितनी भी हमारी हमने कॉस्ट, हमारे सेल की कॉस्ट है, वही हमारा परचेज होगा. सो यूर क्रेडिट परचेज इज 6 लाख इनटू creditor collection period is given, that is your 4 week divided by this 52 number of days in a week. So here the creditors are this 46,154. When you subtract creditors from the current assets, you will get net working capital, current assets minus current liabilities. Now after that you add the 10% contingencies which is given, allowed 10% of the contingencies. Now 10% of this figure, 10% of what? 10% of, this is your 10% of your just wait, this amount is, this is your 10% of net working capital. This, now you get, after adding 10% contingencies to the net working capital, you will get working capital requirement for the non-manufacturing concern. So this is the calculation for the working capital requirement for the non-manufacturing concern. So please go through it. If you have any problem, just write in the comment box, right? Thank you students, thank you so much, and keep learning. Listen, I am uploading all the videos regarding this working capital management. If you want to learn something about working capital requirements, so please subscribe this channel and don't forget to press the bell icon button so that you get the notification for upcoming videos. Thank you students, thank you so much. Stay safe and keep learning. Thank you once again. Thank you.